Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me, I'm joined by Ashton and Hechter, both from Anchor Capital. Now today we're talking Aspen Pharmacare, a multinational South African holding company for pharmaceutical concerns and the largest drug company on the continent. Gentlemen, good to have you with us as always. Maybe if we do run through some of the numbers briefly, Sean, with regard to Aspen Pharmacare, quite a substantial holding and a large exposure as well to emerging markets.
This is a big business. It's 116 billion rand business. A lot of the growth that they've achieved over the last number of years has been acquisition driven. And it's gone from a very small South African player in the form of originally SA druggists or the acquisition of SA druggists to a multinational company now, still largely emerging markets. But South Africa is down to about 22% of the group's revenue now. So it's actually very much a global business.
Sure. On that, though, it does have entrepreneurial roots. Stephen Saar, together with a few of his colleagues in the industry, coming together to create some substantial mines. So I take it from a growth perspective, this has clearly surpassed expectations.
Yes, I think what you've seen is an environment with fairly low cost of capital that they've taken advantage of probably since 2008 up until now. I think that might provide some headwinds going forward. It might limit their ability to do the same kind of M&A that they have in the past. But they certainly did take advantage of market conditions, and the management team have an exceptional track record of delivering value via M&A.
On the slide that we do have on screen, though, one of the last points alludes to regulated pricing being an issue. Why is this the case?
It's a big issue, okay, because in most markets that you operate in, medicine pricing is a very politically sensitive issue. And it's not just South Africa, it's other emerging markets as well, and developed markets. Government lands up in many instances telling you what you can charge for drugs. So in South Africa, we've got the single exit pricing mechanism, which provides a formula by which companies are, in theory, be able to recover cost increases from exchange rate weakness and local inflation. But in reality, the kind of price increases that they've been giving through to the industry have been nowhere near what they actually need to achieve margin steadiness. So, for example, I think the most recent single exit price that was granted was something like 4.8%. It's quite clear that with the rand having weakened significantly, these companies' input costs are going up a lot more than that. So I think in South Africa, Aspen faces quite a material margin squeeze. And indeed, when you look at so that's the regulated pricing industry, is that one of the disadvantages of them is that they don't have full pricing power for a lot of their products. And then the other key issue that faces Aspen at the moment is one of currency mismatches, in the sense that, as we've touched on, they're still very much an emerging markets business, but a big chunk of their costs are dollar denominated.
If we do touch on that, though, and looking at the graph regarding earnings per share over the last few years, this hasn't really hampered their strength too significantly. Double-digit growth in the 20s.
Absolutely. Yeah. So they've been growing mid-20s, 25% compound since 2008, I think it was. I would say, Gugu, that probably, and they don't break out this disclosure very easily for you, but my estimate would be that probably half of that earnings growth has been corporate finance led, in the sense that they've acquired businesses that they didn't own in the prior year, and that earnings accretion is added to EPS growth. So if you strip out the impact of corporate activity, I would guess that the growth is more like maybe 10 to 15%, but still a very good track record. They've delivered value through these transactions. But I think, as Liam has alluded to, given the fact that debt levels are higher than they've been over time, and the cost of debt, certainly in South Africa, is going up, so that it could be difficult for them to do as much of it now as they did in the past.
The issue of debt, then, Liam, doesn't that raise concerns about future growth prospects for the company?
Yes, and I think that it's been reflected in the share performance over the last year. It's performed quite poorly, and if you look at sort of trying to isolate the reasons why, I would say that the fact that they're generating only 20% or 22% of their earnings in traditional hard currency, whereas half of their debt that they've used to fund all these acquisitions in the EM are in US dollars, means that they have been running a bit of a mismatch between where they're generating the revenue to and the free cash flows to pay down the debt, and the cost of that debt when translated back into rands has had quite a material impact, and will have a material impact on the income statement going forward. You'll see ultimately some margin pressure, but over time we think that this will come out in the wash, and things will stabilize hopefully from here. We should start to see a bit of a trough in terms of the margin compression as a result of currency weakness in the life of Aspen.
Even having said that, though, one want to wonder and keep on saying and arguing, though, that human beings will still need medical facilities. So regardless of the pressures that might compound against this company, the prospects are still there.
No, I think the underlying volume growth story is very much intact for Aspen. The key issue that they face is one of margin and one of pricing. I think the volumes are going to be there. But I think also that the important point to make is that, to my mind, the investment thesis for investing in Aspen has been significantly de-risked over the last number of months by what the share price has done. So arguably you might say that the premium that Aspen enjoyed at its height was too high relative to the broader market. I mean, it got up to more than twice the rating of the average share in the JSE if you just work it on the basis of the Swix index. And that premium has all but collapsed. I mean, you're now probably trading on a forward basis, possibly in line with the market, certainly on a trailing basis, a slight premium. So the market's not giving Aspen credit for its long-term track record anymore because of the fact that I think this coming year will represent a tough year from an earnings point of view. A lot of those factors are out of their control, in the sense that currency movements, there's not much they can do about that. But obviously, I guess they're being punished for their capital structure in the sense that there's a lot of dollar debt versus emerging market currency revenues.
I think just to touch onto that as well, what they have announced is that they should be refinancing some of their US dollar debt into euro to try and match some of the where the revenue is being generated. So that should certainly help them.
On that, though, and some of the geographic locations in which they are spread, Australia, some of the emerging markets we alluded to together with South Africa, are there potential prospects for them to expand even further? If not into other emerging markets, would developed economies ever be an option, or
certainly,
is that a stronghold
I
for
think
GSK?
I do think there's more scope for them to expand into more emerging markets and developed markets. I think they've looked at the US as well. China, they were going to go into an infant milk formula business there. That didn't work out at the time, but I mean, it's not to say that it never will. So I would expect to see in the fullness of time the ability for this business to continue to consolidate and grow its distribution network into new countries and new territories. I don't think that's done. I think Stephen Saad is hell-bent on making this business a lot larger than it is today, and his track record of corporate activity speaks for itself. So don't expect this company to stand still forever.
On the talk of corporate activity, we have to compare it to its peers, the likes of Adcock, which now falls under the Bidvest umbrella. You also have Ascendus Health, which is a lot smaller from what I understand and deals in different areas. But would there be a possible comparison here between these three at all?
I think that Ascendus is a much smaller player and more focused on kind of the nutraceuticals type of the business than hardcore pharma. So they sell a lot of vitamin products and enhancements and the like. And it's a much smaller business. So I think that I guess what's beneficial for them is that they'll be shown a lot more transactions that could potentially move the needle for them, which in Aspen's life it wouldn't really make any sense to devote management time to because it's too small. So arguably you might find that it's easier for Ascendus to grow via acquisition now, given their base and their starting point to what Aspen is today. I think Adcock is quite a different animal altogether in the sense that it's very South African focused, and unfortunately the market is not big enough for them to achieve scale here with the kind of infrastructure that they've built out in South Africa. So I think it's quite a lot harder for Adcock to earn returns in the South African market than what it is for Aspen to, because Aspen has got a manufacturing facility in Port Elizabeth that can service markets around the world. So they've got a lot more volume throughput that they can put through that facility to recover cost overheads. So you need to have a global market, I believe. I don't think the South African market alone, if you're running a large manufacturing outfit, is sufficient enough to create scale. Yeah,
53 million people can only get you so far, right, when it comes to earnings. But what about the new introduction as well of the state-owned pharmaceuticals company? Could that pose a kind of threat to the organization, Sean?
I think it's a threat at the margins. I mean, potentially what it means is that they might lose some tender business. But I think it's important to contextualize what this is in their life, ultimately. So Aspen is a business that does revenues of, call it 36 billion rand annually. They probably make gross margins of 17 billion or gross profit of 17 billion out of that. And just to put it into perspective, their 20% of the 3-year tender that was announced in 2014 amounts to about 600 million rand of turnover per year. Okay, and the margins will be significantly lower, we believe, than the average of the rest of their business. So even if they lost that entire tender, I think it would probably have an impact of 2% on profits or less. So yes, it's an issue at the margin, but it certainly doesn't kill their business.
Well, we've certainly said quite a bit. Let's get our perspective now from our experts, whether to buy, hold or sell Aspen Pharmacare. Liam, buy, hold or sell Aspen Pharmacare?
Aspen certainly ticks the boxes for us in terms of what we look for in an investment. The valuation has become a lot more attractive over recent months. The management team haven't changed. It's the same exceptional management team, one of the highly regarded management teams on the JSE. You're going to see structural growth in terms of drug usage around EM, and that kind of, that sort of ticks the right boxes for us. And I would say at these levels, I would certainly accumulate Aspen, possibly go in at half the weight that I would usually, and then accumulate after re-evaluating after the next set of results.
Sean?
I think that this financial year is going to be a tough one for Aspen. And I think specifically the first half could well look quite messy because you've had the sharpest currency movements that will be most adverse for them that you've seen in a while, and certainly probably worse than the full year. So I think there is risk of expectations still being too high for profit growth this year. I think market expectations are about 20% growth. Some of the better analysts out there would say are looking for a lot less than that, and that could even still be too high. So, but I think the price is coming down to a level that's starting to make quite a lot more sense. I'd be inclined to probably wait for these numbers because I don't think there's going to be positive surprises. I suspect there might be negative ones. So there could be some short-term price weakness, but that would create an opportunity to get in at an attractive entry point potentially for what is still a fantastic business. So I'm a buyer, but what I'm saying is it's a cautious buyer, but let's see what these results look like.
Exactly. Waiting for results, and we'll get some more clarity with regard to just how messy 2016 could be. Gentlemen, thank you so much for your time today. A big thank you to both Sean Ashton and Liam Hechter, both from Anchor Capital, joining us today on Talking Stocks, talking Aspen Pharmacare. That's where we leave it though for today. Do catch us again next time where we talk more stocks.